Hi guys and welcome to the video. Today I'm going to be talking and walking you through trend lines. So how I draw trend lines, how I use trend lines within the market, and my strategy to actually taking entries from trend lines. So the first thing I think you need to know about trend lines is they're completely subjective, and there is a correct way to use them within the market. Because saying they're subjective, someone for example may have found this trend line, and someone may have found this trend line, and someone may have found this trend line. And if you draw every trend line that you can see, your chart will honestly make no sense whatsoever, and you'll be waiting forever to find these entries. It's just clutter and you don't need it. So that being said, the first thing you want to do is find out what type of market you're in. Now from the chart, because we're seeing these price making these higher highs, that tells you that we're in an uptrend. Yep. So when it's an uptrend, that means you want to be finding buys, because the trend is your friend, as they say. So what I then do is, using the trend line tool, is find the lowest low that I could see on the chart. Now again, as I say, trend lines being subjective, some people like to go from the wicks. I like to go from where the candlestick wick is rather than the close of the actual candle. So I'd go from the very lowest low, right there, across, and I like to include all of the wicks when I'm drawing my trend line. So I'd include this red wick here. Now, one thing that is part of my strategy is the third touch on a trend line is usually the magic touch. So in this example you can see one touch, two touch. Now this little clutter here I'd consider one touch, just because it was one candlestick right after the other and they both created wicks. So with that being said, on your third touch here, that's where the magic happens, and that is where GBP rocketed, as you can clearly see. So on the third touch, the market absolutely shot up, and this is where your other analysis will come in, because you need to know your exit point, of course. So in this section here, we've got resistance, and also below it we have resistance using the wicks. So if you would have taken this trade here on the third touch, I would not have got in this trade straight away when I seen the touch, because you need to wait for the pullback, or if you're looking for a buy, you need to see the buying momentum. So I would have waited for this candle to form, this green candle here, that one right there, and once that formed and we saw the close, right there is where I would have took the buy, because we can see prices reacted to the trend line and continued to go up. So if you would have taken that trade after the bullish close, all the way up to this resistance zone where we started seeing wicks, so say you saw the wick and you closed it there, right on that red candle where we saw the wick, that would have been 558 pips. Magic, right? So as I was saying, trend lines really are subjective. Like, you could have drawn so many different trend lines within this market, and there are so many different trend lines you could draw, but it just creates a mess. So you want to stick with your highest high and just keeping all the wicks within the trend line, and it gives you a lot more information when you're including all the wicks, because you can see how price is moving and where price is moving within. For example, often when drawing trend lines, this is one that I drew before, if you continue this all the way into the future, you'll be able to see that pairs typically trade in triangles. Now, the best part of triangle trading is breakouts, because you get a lot of false breakouts, like here for example, but that would have been fine anyway, because in this market, as you can see, we're getting lower. We've got the retracement where we would have gotten in, and we would have had this trend line drawn. But you want to wait for the market to come to you. You don't want to jump in the market, and you wouldn't jump in this because price has broken out your trend line, so now it's going to the sky. Because remember, we still have, or would have had, should I say, these resistance points drawn from the wicks. So we would have known that price could have gone to the resistance and come tumbling back down. You want to wait for a candle like this. These candles here, this extremely large red candle, usually show market's intention. So there's been a lot of selling power here. So because we've got all this here is clutter. There's a lot of wicks, there's a lot of indecision. So I wouldn't have taken that trade above. I would have waited for a very clear sign, being this huge candle here, to know, okay, the market now wants to go to the downside. So what you then do is use your previously drawn trend line from the lowest low, and you'd wait for a triangle breakout. So you can see, if I delete this, here we've got another area of consolidation, because the market's being indecisive. We know where it wants to go, it's just taking its time. So once we see a large candlestick breakout of the triangle, i.e. this red candlestick here, right there where my cursor is, we know that price is broken out of that trend line now. So price wants to continue in which direction? If it's broken out, price wants to go down. But we don't get in when we see the close here, because more often than not, when price breaks a trend line, so when we've seen price come out of that trend line, we will see what's called a retracement. So price will go back up to the trend line, because let's not forget, this trend line, when we was in the uptrending market, this trend line was incredible support. Once support's been broken, it then has to be tested as resistance to see if it stands. So once price has come through here, it's no longer a support, it's a resistance trend line. So we'll see price come back up to test this trend line to see if it is resisting. And that's what you get right there. So price has broken out of the trend line, it's gone back up to test it, it's respected the area, and then that is when we get the downwards movement. So price essentially is moving in this zigzag formation, breaking out, testing, continuing the breakout. So I wouldn't have got in when we saw the red close outside of the trend line. I would have waited for the retest and then waited another candle showing the downwards direction. So I would have gotten in right there on this after the large one, this third little candlestick here, this red one, I would have gotten in on the hour when that closed. And then as you can see, price rocketed down, and you can see how far price has traveled down. There is literally no support in that area whatsoever. So more than likely I wouldn't have taken that trade all the way down. I would have seen this area here of support. If you go from the wicks on the left across there, so I would have waited for price to react around this level and seen what happened. So when price would have touched this level here and I saw this green candle, so there's the breakout. When I would have seen this green candle here close, I'm not psychic, I would have thought, okay, it's respecting the area, it's about to go back up. So I would have taken myself out of this trade and closed my position after this candle closed here. So if we count the pips, right from the red candle close there, down to that green candle there where I said it would have closed, that's 400 pips. Now remember, we didn't even have to come back in and reanalyze this chart because we already had that trend line drawn. All we've added to it was the support and the resistance and another trend line. But you can add trend lines in as price is moving. If you look back, this is the 4-hour chart. This trend line would have been here since that's the lowest low and that's where we found a touch. So this trend line would have been here since October. And we wouldn't have had to redraw anything. We would have just been waiting for price to come back, react to it, and break out. So just to sum up, in an upwards market, we'll go from the lowest low, we'll draw our trend lines on the outside of all this price action and we'd cut out the noise. We'd wait for the 3 touches, a close in the direction that we're wanting, and then we'd take the trade to the top resistance, which is where we found our exit point. And also we can trade triangle breakouts. So we saw, including all these wicks, we had our triangle. Remember, if we see lots of little clusters and trade consolidate and not really know what it's doing, we don't consider that a breakout, so we would have ignored this. That is a false breakout. We would have ignored this. We want to see a very clear line indicating where price wants to go. After a very big shoot down or a shoot up in the market, it's very common to see consolidation. So we would have waited for the breakout of the trend line here, the retest of the trend line, a candlestick to close in our direction, and then we go down, all the way down to the level of support. So I hope that's cleared things up for you guys. I hope that's made a lot more sense in how to essentially clean up your charts, avoid lots of clutter, using trend lines in the best way that I think personally. Like I say, trend lines are subjective, my strategy is subjective, it's just what I prefer, but I think it keeps your charts very clean, and the way you're drawing them from the lowest lows or the highest highs, it allows you to keep those trend lines for weeks, months, without any redrawing, so you can just go back to your charts, check where you're at, and continue from there. If you did like the video, please go ahead and give me a follow on Instagram. I'm very active on Instagram. I post daily results, daily trades, daily ideas. So Instagram at dale.fx. Give me a follow, let me know you enjoyed the video, and I'll see you on the next one.